Hey Don, can you hear me? You said connected to the audio.
Hey, there we
Hey
go.
man, how you doing?
Man, I'm living the dream over here.
Hey, I love to hear it, man. I love to hear it. Listen, I apologize, man. I was trying to set these appointments, man. Had
Hey,
a
no apology needed for hustling.
let me go ahead and get this started real quick. One moment. Uh all right, perfect. I got it. Okay. So Don Folk, Unisource Mortgage, man. How you doing?
And I can't complain. I'm just blessed to be in such a good industry and have good partners to work with and be able to educate buyers.
For sure, man. And I know this is going to be a little brief talk, but I was looking and you sent me an email a while ago about that conventional loan program. So what is it called? Can you go more in details to educate our buyers on what's happening?
Yeah, man. So I'm super excited to actually offer it. It's a pretty selective program, and not a lot of brokers have it on the marketplace, and it's a 1% down conventional program. So traditionally, I one of the most common things I hear from people is, "Oh, I can't buy a house. I don't have 20% down." Well, that's such an antiquated way of looking at things. Like when people were putting 20% down regularly,
Yeah,
houses were $100,000.
for sure.
Now that houses are not that, like most of us aren't just sitting on 20% down. So over the years, we've started going to 10% and then 5%. And in the last few years, they started rolling out some 3% programs for
Mhm.
specific income types, et cetera. And the beauty of that is we now have 1% down to offer those borrowers that did qualify for the 3% down
Oh,
a
wow.
couple
So
of years ago.
1% down, that helps out a lot of people, especially in today's market. I feel like, when they drop these rates, the housing market is about to go up. And, what would a specific for a borrower, what would they need for a credit score, income, or debt to income ratio?
Yeah, man, those are great questions because at the end of the day, the one thing I'll say about this program is it does have some specifics that don't apply to normal conventional. Now, the beauty of it is that the credit score is the same as standard conventional. So
Yeah.
620 up,
Okay.
which is an awesome opportunity. It's not like we only offer this program to elite credit borrowers 750 up or something.
Yeah.
It's not that. If any credit score that would qualify for standard conventional financing with us, we can do in the 1% down. Now, debt to income wise, traditional the back end cap for conventional is about 50%.
Mhm.
Usually you will see these for most borrowers cap it somewhere around 45 to 47%, but
Okay.
it's still very, very doable. And if there's two people on the file, sometimes we can push it a little bit higher, but usually it's going to stop somewhere around 47%.
Okay.
And when I talk about that, as far as the back end ratio for a borrower, that is their total expense ratio. That is everything on their credit report, their monthly minimums divided by that income that they're making. So that is their total expense ratio. So their car payments, their credit card minimums, their student loan minimums,
Mhm.
and their housing, their new projected housing payment. But it's not like we're in a situation with USDA or something where they're capped very low. It is still very close to the standard conventional cap for debt to income.
Okay. Okay. And so when you talk about that 1% down, how does it work? And are there like additional costs or fees associated with it?
No, that's a good question though. So
Yeah.
generally, when we talk about non-standard down payments, so
Mm.
not 3.5 for FHA and not 5% for conventional, we're generally talking about what we call DPA or down payments assistance.
Mm.
This is not down payment assistance. So there is no repayable second lien on the house. There is no second mortgage you have to close on the house. This
Yeah.
is a grant. So what is happening is conventional requires 3% down. There is no guideline with Fannie and Freddie that says we can do 1% down because we're special.
Yeah.
They require 3% down, but the beauty of this program is that the lender has a grant that covers the first 2% of that down payment.
Mm.
So you're only paying 1%, and there is no terms of repayment for that. There is no anything on that. And that's beautiful for you because if I'm coming in as a borrower and I'm borrowing in this house, I don't have a loan for 99% of the home value. I have a
Yeah.
loan for 97% of the home value, meaning the lender just gave me 2% of the equity of that house.
Mm.
And so that is why I'm so passionate about this program and trying to educate as many people as I can. Is there's no there's no catch on this. It's the
Yes.
only thing in the lending world that when it seems too good to be true, it actually is.
Yeah,
And that's why I want to make sure that we educate people so that we can really help them out.
for sure. And what documents will borrowers need for the application process, and how long does it usually take to get approved?
Yeah, that's a good question. So it's the standard documentation we're going to need for most conventional loans. So unless you're just out of college and you're working in your career field, we're going to need about 2 years of employment history without any gaps in a similar line of employment. So we can't have you jumping from car salesman to secretary to medical equipment salesman. We need to keep some consistency there. But if you went from a school teacher at one school to another school over the summer, we can
Mhm.
always make those sort of deals work. Um, Second thing we're going to need on that is it is slightly geographically based.
Okay.
So it is not excluded from urban communities or specific to rural communities. It's the geographic distinction is it's based on the median income of the area.
Okay.
So for the surrounding metro Savannah area, so any of the neighboring counties, to qualify, you need to make less currently than 73,200 a year.
Mm.
um, which that's a very, very doable price range. Now, if you're in Atlanta, that median income is higher, so you can
Mhm.
qualify with a higher income. For the neighboring Savannah areas, 73,200 is what we're looking at. Now, if you're one borrower, that's 73,200. If you're two borrowers, that's 73,200 combined.
Okay.
So sometimes this program is a little bit better for a single borrower if they have a great job. A lot of households, however, still qualify for that.
Mm.
And that's a great thing. One thing we do want to look at with this, as you get a little bit further out into the country, into Bullitt County and further over into Claxton, et cetera, that does start to drop a little bit, as do the house prices. So it is a little easier to qualify still at that new adjusted median income.
For sure, for sure. And last question I have, can you provide some successful cases where borrowers utilize this program?
Yeah, so I actually had a realtor out of Richmond Hill recently that sent me over a guy that was pre-approved USDA. And
Mm.
his reason for going USDA was he has great credit. He makes under that median income cap, and he just doesn't have the money for a down payment.
Yeah.
And now he has money for closing costs and stuff. He's got probably about 3% total down in his account, but he knows he needs about 3% for closing costs, et cetera. He's like, USDA, 0% down. That's what I need. Well, it isn't like his credit's so great. He qualifies for this. His credit's so good that we're able to put him in 1% down and get him a credit back from the lender for the rate.
Oh, wow.
So that credit back from the lender is almost $1,200 on his
Mm.
specific house. So now not only is he doing 1% down, his down payment is about $2,800. Now he's getting 1,200 back. So he's only going to be coming out of pocket 1,600 for the down payment plus closing costs. The
Yeah.
realtor got him a little closing cost help. He's in and out the door for less than $5,000 total.
Yeah.
And he's getting a better loan than having to be restricted to just a rural property with USDA. He's
Mm.
able to get a house into a more suburban market where he wants to be, closer to family, etc.
Hmm.
Um, and he was able to go to a slightly higher DTI since it was conventional. And
Yeah.
that was able to help him afford about $25,000 more in house so that he could get the extra bedroom he was looking for to make sure that his family had the room to move they needed.
That's awesome, man. That's awesome. And thank you so much. And what is this conventional loan program called?
It's right now. It's funny because when we have conventional programs, we love to give them nifty little names like Borrow Smart, Home Ready,
Yeah.
Home Possible. This one's just simply called 1% Down Conventional. They didn't come up with a
Wow.
catchphrase on it, and I think the reason for that is that we want to focus on the fact that it is 1% down, no gimmicks, no repayment, no funny down payment assistance with a government catchy name. It is what it sounds like. Because
Yeah.
one of the things I love to focus on as a broker in this space is transparency with my pricing, transparency with what the cost is going to be, and letting my borrowers know what they're getting. With this program, you're getting 1%, you're getting it down, and you've got a lot of options to go with that. So, no funny catchphrase on this. It's
Yeah.
1% down conventional.
Awesome. So Don with Unisource Mortgage, how can the people get in touch with you?
Well, man, there's a lot of great ways you can get in touch with me. First of all, you can always go to unisourcemortgageservices.com. You can apply straight through there. All my contact information's on there. The best way, though, if you just want to talk or you want to text or you want anything, my cell phone number is 229-205-7864. 229-205-7864. Or they can reach out directly on Facebook to either of us. I know they can find the 5-Star Realtor on Facebook. You can
Yeah.
find Don Faulk, Loan Officer, on Facebook. I'd love to talk to you a little bit more. You can send me a DM on there. You can comment on one of my posts. I'll get back to you. But any way you want to reach out, it's 2024 now, so
Yeah.
there's no way that's too weird. Just don't send me a letter because I think we're past that now.
Awesome. Well, thank you so much, Don. Just having a quick conversation, just educating our buyers on what opportunities out there outside of a traditional mortgage or a traditional loan, you know?
Absolutely, Josh. Well, thanks for the opportunity, and I can't wait for us to get some people rolling with this program.
For sure. Hope you have a wonderful day and a fantastic week. Peace.